Hi traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. And this week we're going to look at it's similar setup to the one that we had last week, whereby knowing and being able to identify those really key support zones and understanding the market behaviour can really help determine trade locations, but also the best trade stop placements. So with that being said, let's go take a look. Hi guys, so this is my trade of the week, and I want to talk about the importance of these of identifying these really strong support and resistance zones, and then how you can use them. And then I'm also going to offer an alternative way to trade them, and also tell you why I traded it the way I did, why I had the stop placement where I did, and just the advantages and disadvantages of trading it the way that I did. So we had this really clear zone of support and resistance, whereby we'd had resistance here, we'd had resistance here in this zone, and then we had broken up, and then it just acted as support. It acted as support here, and then acted as support over here, and then again here as well. So you can see several times it had acted as resistance and then support. So we know that there's a lot of liquidity in that area, we know there's a lot of interest in that area, and therefore, although we was getting a really strong sell-off, so we was against a very strong move in the market was extended into an area that market participants had seen value before, so therefore it's a good area. It's with the overall trend, because although this is a very strong sell-off, overall, all the time we're above this zone, the market is still bullish on the daily time frame. This is the daily time frame. So we had issued a trade whereby we entered at 42.80. The reason we had entered at 42.80, I'll show you in a second. We had our stop at 42.95. And we was just targeting one-to-one. Again, when you're against these sorts of trades, against these sorts of trends, you really just want to make sure you're booking profits quite aggressively, because you're against that really strong trend. Just because it reacts from this support zone doesn't necessarily mean that bear trend is over and we're all of a sudden going to push off. It may very well do that, but it also may just be a retracement from a value area before it then continues down. So we need to be aware with that, and therefore we need to be aggressive with our targets as well. Now, the reason that I chose an entry with this at 42.80 is because you can see, if you draw along the line there, you can see these areas here, this area here, was the last support. So I wanted to make sure that I was in around that support area, because there was always the danger that the market would come and take these swings out here, create that liquidity grab that we always talk about. But there's also a danger that the market reacts from this sort of area and then just shoots off and doesn't give you an opportunity to get in. So we had a blind sitting order here at 42.80, and we had a stop at 41.95. The reason for that 41.95 is to allow for that liquidity grab that we always talk about. And notice that's exactly what it did. So although we could have had our entry down here, because we know that the liquidity grab can often happen, we also know that it potentially could react from here. So that's why we chose a slightly higher entry, but we made sure our stop was in a place to allow for that other liquidity grab, which ended up happening. So it's all about stop placement as well, and then this trade actually went and worked nicely. So if we go back to the 1 hour chart, I can show you some other ways to trade it and some other ways that we managed it as well. Right, okay, so this is the action coming into it, and as you can see, it's a really strong downtrend, some really impulsive moves. We're extended on the hourly as well into this zone, and we get entered here. We have an initial reaction from that level, that 42.80 area that we had identified as potential support. So you can see that we did actually have the reaction from there, and then we pushed down even further. We pushed down, we took out that liquidity, and then we actually did create a buy reversal signal from here as well, having taken out that liquidity. Now, if you're not already in that trade, what you can do is you can enter on this reversal. and your entry is going to be around the same place. The difference being is you can have a much tighter stop below that reversal pattern, and even if you've entered in this trade from that area as a blind buy, when you see this reversal signal, you can then actually tighten your stop and reduce your risk, so that you now, if the market does reverse and doesn't do what you expect it to, you lose less money than you had originally anticipated. So it's all about risk management. And now the reason that we didn't wait for this reversal as such is because we can often sometimes see from these really strong support areas, we can see really quick reactions, and by the time the reversal sets up, the market could be way off in distance and your risk to reward doesn't really make sense. So that's why we had an aggressive entry, but we was aware of where the market could go to, and we had our stop in a place whereby our trade was still protected. And if price had gotten down to that 41.95 area, the trade was definitely wrong. It was a more sustained break, and therefore we wanted to be out of that trade. And then, as you can see, once it actually created this reversal pattern, it actually went on and went through our target and actually ended up going higher. So that's my trade of the week, guys. Again, just being able to identify, so practice you being able to identify those really strong areas of support and resistance. And you know what? It's okay just to take those trades as well. Okay, it's okay not to look for some of the more intraday stuff. Maybe sometimes you just want to look for those really high probability trade setups on the higher time frames, and that's your trading style. So hopefully you find this useful, and I'll speak to you next week.